All right, I think we're ready to get started for the deep dive this morning. We're going to talk this morning about mortgage rates and really a couple of options for affordable financing. I think it's going to be something that's going to make a difference in this market. You know, folks that start their week with the deep dive talking about the most important topics in real estate, and glad to have you on. What I'm going to do is I'm going to share my screen here like I always do, and if I can get that figured out here. And we will get started on this topic. Again, if you're a KCM member, you can go in, you can grab these slides. But here's what I'd encourage everybody on here today to do is to take some of these slides, maybe take a picture while we're going on, post it, and say, hey, I'm talking right now or learning right now about ways that are out there for financing and the sort of the title here, smart ways to help buyers save alternative financing. We've got three things on here. I'm going to kind of give you a sort of a state of the union on the mortgage market. Then we're going to talk about what are the options out there for folks, and then I'm going to give you a couple things to share, like we always do, so that you can create those conversations to engage people. Right? I do believe right now there is a buy opportunity that's in the market when a lot of people are saying, we're going to wait, we're going to kind of hold off. And I think there is an opportunity. So let's start right here with Business Insider. They said this: mortgage rates are expected to ease as inflation slows and the Federal Reserve lowers the federal funds rate. But in the last few months, inflation's been ticking up. Certainly all of the mortgage market, the economic markets are based on incoming data. Okay, things that are happening real time. Even in the last couple of days, we kind of ended up last week, a little bit of economic help, saw some relief on mortgage rates, dipping our toe back in the sixes. I was on Mortgage News Daily this morning. I think we're right below 6.9% on the 30-year fixed mortgage. That's a good thing. But the bottom line is inflation's proved to be a little bit stubborn. The target is 2%, most recently 2.8%. I think what we're going to have to see is what's going to happen there. Nobody knows. Nobody has a crystal ball. There are a lot of questions about, tariffs and things like that, and what impact that could have on inflation. But all of this is going to sort of create the path of mortgage rates in this country. Odetta Cushy does such a good job with First American. She said mortgage rates may drift lower from 2024 levels, in part driven by some narrowing of the mortgage rate spread as the Fed's policy outlook becomes clearer. This idea of the spread, we've talked about a lot about it over the years. Keeping Current Matters. If you're a KCM member and you followed KCM, you're well familiar with that. But the spread is this. This is the spread between the 10-year Treasury rate, the 30-year fixed mortgage rate. And over the last 50 years, they've moved in unison. They've had sort of this symbiotic relationship. Wherever the 10-year goes is sort of an indicator of where are mortgage rates going. 10 years coming down, that's a good indication mortgage rates are coming down. 10 years rising, and the average spread you see there, I'm trying to get my cursor there, the average spread's been 175 basis points, or 1.75%, put simply. So if you took the 10-year, you added 1.775%, historically, you would be at the 30-year fixed mortgage rate. Now, I don't think as agents we need to become, sort of secondary mortgage market experts, but you need to have an understanding of it. You need to have an understanding of how the mortgage market works, and have a great partner, by the way, that can lead your clients through it. But that spread, this is a look going all the way back to the beginning of 2023. So 2023, 2024, obviously we're in 2025 right now, has been as wide there. You see at the beginning 2.77%, and right now 2.3%, or 234 basis points, however you want to say that. It's wider than the historical norm, which a lot of times I think about that as a indication of fear and uncertainty in the market. So what Odetta Cushy is saying is, as things become more certain, that we'll see the spread lower. That's where we'll see improvements in the mortgage rate market. Now, what becomes more certain? Well, the path of inflation becomes more certain. Impacts of policies like tariffs and things become more certain. And that's what then will bring us some, relief in the mortgage market. I don't see anybody calling for a tremendous change or drop in mortgage rates. And I'll go over what the latest projections are. Our research team KCM does such a phenomenal job. Anytime you get, forecast from KCM, we are constantly updating those, saying what are experts saying about, what's ahead. But U.S. News said the 30-year fixed mortgage rate is now expected to stay elevated between 6 and 6.5% for the next 2 years. Just 2 months ago, economists thought it would fall into the 5% range for the second half of 2025. That is absolutely right. A lot has shifted in sort of what folks see forecasting for mortgage rates. Now, I think that's 6 to 6.5% for the next 2 years is a fairly conservative forecast, in my opinion. But I do think there's truth to that. If you look at the most updated forecast, this is as of the 20th, just a few days ago, 4 days ago. And this between Fannie, MBA, Wells has us somewhere between 6.5%, by the end of the year. And I think that's a fairly conservative and fairly accurate forecast based on what we see coming forward in the mortgage market. So given that, well, how do you navigate that? That's the question that I sort of want to put on the table. And there may be even in the chat here, I'll take a look, if folks want to add things in, how you're navigating it, or if you have ideas that, are going to help folks navigate the mortgage market. I just saw Steve Reed join. Good to see you, Steve. Great partner for anybody in the mortgage business. Does a phenomenal job. But I think this market is going to be all about how do you help people navigate what's going on. So I want to talk about this: 3 alternatives to finance things in this market. And really kind of starting out from the top there, buy downs are one, adjustable rate mortgages are an option, assumable mortgages are an option. And I do think right now, assumable mortgages, it's not something that is widely used for a lot of reasons. There are challenges to it, and there are sort of roadblocks to it. There are companies right now, we'll say that are trying to make that more of a suitable option for buyers. If that gets unlocked, if the assumable mortgage gets unlocked, and that's going to be a phenomenal thing for the housing market. I don't know that any of that is on the verge of happening, but I know people are working on it. So let's start at the top. How does a mortgage buy down work? A mortgage buy down, also known as a mortgage rate buy down, involves paying an upfront fee in exchange for a lower mortgage interest rate. The rate reduction can either be temporary or permanent, depending on the buy down type. Now, talking with a lender about this is the most important thing. What's most important about the individual, to them in buying the house? They could be there forever. Do they want to try to buy it down? Is buying it down a good decision? But probably one of the most popular ones in the market right now is a 2-1 buy down. If you're not familiar with that, then talk to a lender about it, where you can qualify for the full payment, but get in for a couple of years on a little bit lower payment that's bought down. Now, why is that good? I think it's a good deal right now, because I think in the next couple of years, we will see a little bit better mortgage rates. Okay, so if that does then become true, you can refinance. But here's the other thing that's very interesting. 27% of buyers most recently requested mortgage rate buy downs from sellers, or seller concessions to go in and help them buy down the rate. So, somebody that's selling something that's maybe a first-time homebuyer product, or something that sellers need to consider right now, as folks are thinking about buy downs. The share from CoreLogic and Freddie Mac, the share of mortgages that have buy downs has sort of grown over the last couple of years. This is from fall of 2021, and you see it sort of ticking up, sort of dipping down when maybe we get a little bit of relief in mortgage rates. But 3 or 4% of mortgages, have buy downs attached to them. I think it's an option that many people would consider and would want to, sort of look at as they think about buying right now. If a lot of people are on the sidelines going, we're not sure if we want to move forward, and then somebody can step in with a way to help somebody move forward, that is a win. The other option to get in affordably, I literally had this conversation. I was on the road last week in Atlanta with someone about a property they were purchasing, and should they go with an ARM, should they go with a mortgage rate? Not that I'm giving that advice, but just the sort of thought process of it. An adjustable rate mortgage, Lance Lambert said this, and he's absolutely right. ARM products today are different from many of the products issued in the mid 2000s. Before 2008, lenders often approved ARMs based on borrowers' ability to pay the initial lower interest rates, and sometimes they didn't even check that. Remember ninja loans, no income, no job. I think you didn't have to qualify for a loan back then. That's the reality. But he goes on to say today's adjustable rate borrowers qualify based on their ability to cover the higher monthly payment, not just the initial lower payment. So I think an adjustable rate mortgage is certainly an option in this market, and the percent of ARMs increases with mortgage rates, right? As mortgage rates have kind of trended upwards, so have ARMs, and I think you'll see more people go, hey, that's a great way to finance what we want to finance right now, if it's the right thing for what they're looking at. Okay, so if you just kind of go back, there's a buy down, an adjustable rate mortgage. Navigating this market helps people go, okay, now we can, right? And then third, an assumable mortgage. What's an assumable mortgage? Assumable mortgage allows a buyer to assume the interest rate, repayment period, current principal, and other terms of the seller's existing mortgage rather than getting a brand new loan. Biggest potential is that the term of the seller's mortgage, especially the rate, might be more attractive than the terms available on a new mortgage. That's absolutely true in a lot of cases, and we know that. Again, this is assumable mortgages. I think that there are folks, you could talk to folks about that. I've heard a lot of stories about folks that have, as a seller, offered as an option, hey, this is an assumable mortgage, and being willing to work with someone on that. What types of mortgages are assumable? FHA loans, USDA loans, VA loans. There are ways to navigate this. I do think it's something right now that probably is not is utilized for a lot of different reasons that make a lot of sense, and I think there are people that want to sort of make that more of a reality in the world, and that is a good thing. So what can you do? What is sort of a way to engage people right now? Let's sort of turn our attention to that, and I guess my question is too, just as folks are thinking about all this, what are you going to commit to? What are the things that you're going to share coming out of this? I think there is an opportunity to share things to engage people. First, there's a KCM social graphic right now on mortgage rate projections. I will guarantee if you share that, you will get people engaged, right? People are interested in this. They're interested in where things are going. A couple of things that I'll tell you about that. People will ask, how accurate are these sort of projections? Well, it depends. If you try to forecast mortgage rates, there's about 50% chance you'll be wrong. I think it's one of those things that is tough to find or to forecast. But if you look at what experts are saying, you can sort of gather things from these forecasts. Each one of the ones that we're showing you right here show them coming down, not by a lot, but should improve. Also, in anything that we publish, whether it's a graphic or anything, we'll give you the source for that report. You can send it to people, like, here's why they believe what they believe. Why is this the case? Well, things getting more certain, like we talked about. And so I think that's one way. Two, read and share the KCM blog today. It's how to buy a home without waiting for lower rates. You want to talk about something that will get people excited? It's that. How do I buy right now and not have to wait for mortgage rates to come a lot lower? I think that's going to be one of the things that's going to help navigate this market for a lot of people, is helping them think differently about buying a home right now. All right. I want to wrap up on this. As always, we've got so many great KCM members on today. It's good to see everybody. Great. I see there, Maria, 1-year buy downs are working for my business right now. That is amazing. I think more people will begin talking about buy downs. That's why I wanted to do the deep dive on that this morning, because I think it's a topic that we want to be sort of aware of and be educated on so that we can help people navigate it. Thank you for that comment. The other thing I would tell folks is get out there and share this information. Just being on the deep dive this morning, learning about it is half the battle, right? Being able to share it and then engage people is going to be what makes a difference. You know, we do all of this at Keeping Current Matters because we have this core belief that most agents in the world today, in the business today, know what's happening. Good agents understand what's happening and understand what's going on around them, but great agents can explain what's happening. And I would even take it a step further and say only great agents can explain what's happening. And our hope is that with everything that we do and on the deep dive is that you have what you need to be a great agent and explain what's happening in the market. Hope you have a great week. We will see you back on next week. I'll be traveling, so won't be on, but we will have a great deep dive. I can't remember if it's Alex or Kate, but they will do a phenomenal job on the deep dive, and look forward to seeing you then. All right, take care.